And two of them are up today. One of them's down. Let's go to the down mover first, where you've got Uber on your list. Breaking down through 40 bucks, breaking down through 39. It's not a good trade for Uber. We are now inside the gap up that happened the first week of November last year on their earnings and around vaccine announcements. So it's not a good situation.
Yeah, and it seems we talk about this stock at least once a month as far as unusual option activity goes, Oliver, because people continue to expect this stock to do better than it is. Just overnight, it came out their chief technology officer is leaving the company in October. Then you've got DoorDash. For
less than a year.
Right. DoorDash filing suit against New York City about the 15% cap on delivery fees. Uber Eats is already involved in that also. So you've had some, hits to this one. But stock's still down about 24% this year, but they're still in there trying to buy dips and they're using call options. And this one was out in December, so at least they're giving themselves some duration or time in this trade, about 93 days. They bought the D40 strike call and sold the 50 strike call to decrease the amount that they're paying for this call vertical. Paid roughly about $1.95 debit on average for this, about 10,000 times, Oliver. That takes that break even to $41.95 to the upside. That's about 9% above the current share price. So you are going to need a pretty significant move higher. Call volume is about double the normal daily average volume. So somebody buying some upside in here, expecting this stock to start to recover into the holiday shopping season, and we'll see what happens because there's still a bunch of lawsuits, and if you think New York and San Francisco are the only two cities that are going to start keep putting caps on delivery fees that DoorDash and Uber Eats can charge, I think you'd be mistaken to think that. But somebody playing this to the upside. But like I said, they're giving themselves over 3 months in this trade, so you're giving yourself some time for that 9% push that they need to get above that break-even point. Okay, so this is a pretty hopeful trade that has what degree of reality behind it, right? I mean, Uber has been steadily downtrending since July. I mean, there's really been nothing compelling in this chart. So this is just like taking a shot, right? Taking a swipe, right? I mean, yeah, but it's an inexpensive one. So you're paying $1.95 for a $10 wide bullish call vertical. Yeah, you need that 9% jump to get above that break even. But if it does somehow recover to $50, you're only risking $1.95 to make basically about $8 on this trade if it gets up there. But that'd be a significant percentage jump to get above 50. Okay. All right. So if we do see this thing start to move, then they're going to get paid out. Obviously, they'll look for something above this resistance point that we just, might have formed. I mean, that's kind of the issue that I see here is $42. You got to get back above a level that held for the last 3 weeks of August, and over the last 3 days has snapped down. So bold trade. Yeah. For Uber. All right, let's go to Twitter next. Two up movers. You got Twitter and Western Digital trades as well. Twitter's up right now about just shy of 3%. Yeah, and this stock was actually down earlier in the session. It's kind of made a move higher, up about 13% this year, but about 4%, off about 4% so far this month. It hit those all-time highs, over $80 a share in February, but it's slowly careened down. And earlier this week, remember, Goldman Sachs came out, coverage on 17 different names. They named Twitter a sell with a $60 price target. But that's not stopping people from getting in here. And they were doing them early when Twitter was basically flat on the day. The October 60 strike calls, traders came in about 20,000 of those for an average debit of about $2.95. That takes that break even $62.95. You've got 30 days in this trade, so just over a month. The break even now, as the stocks moved higher throughout the session, only about 2% higher. Call volume is double the normal daily average volume. And we've seen about over 25,000 of these now traded on the session. So somebody took a shot early when the stock wasn't doing too well with the overall market. Good for them. And it's already paying dividends, but you still need that 2% move to get above that break even into October expiration in 30 days. Okay, looking for 63, not asking a lot. We spent about a week at $65. Right. Twitter still, though,
If you really, want to get down to it, it's got an interesting. If we pull up the one-year chart real quick on Twitter for some context, you've got downtrends off the highs,
right?
But then you've got steady uptrend through the lows. So I mean, over the past year, you've got some, some potential energy building here for Twitter, as we never got above that $70 level again, really, for more than a couple days.
Right.
But yet the long-term trend is in this trader's favor, basically right at this point too. $60 is right where the line intersects for that uptrend.
Yeah, and that was the price target that Goldman came out and put on it when they put a sell rating on it. But if you take a look since that $80 level, I mean, it's probably consolidated more towards 60 than it has towards those highs. And if you look at digital advertising revenue, which Twitter relies on, between Snap and Twitter, those are the two that are having the most problems monetizing users on a daily active basis. So we'll have to wait and see, because more competitors are getting in there. You're looking at Apple, you're looking at Amazon, that are going to go up against the behemoths of Facebook and Google Alphabet as far as digital advertising dollars. So somebody playing this to the upside, you only need a 2% move to get above that break even.
Okay, all right, there's the trade, looking for about $63. Last one you got, Western Digital. Also has been slipping here. Kind of looks like the same type of consistent weakness that we got in that Uber chart, but obviously very different. Nonetheless, since this summer, Western Digital has been on a pretty steady downtrend, so someone's betting against the trend here.
Yeah, it's definitely underperformed the overall chip space, along with Micron. This stock's only up about 5% on the year. It did fall from those 3-year highs we hit above $78 earlier this year. And if you look at some of the analyst calls on this company, along with Micron, they're reducing fiscal 22 estimates on both companies due to the chip shortage and due to demand waning a little bit. But that didn't stop a call buyer from coming in here taking a bullish view. They bought the October 65.75 call vertical, so $10 wide bullish call vertical. They only paid a debit of 60 cents on this, Oliver, so not expensive at all. But why did they only pay 60 cents? Because that break even of 65.60 to the upside's 12% above the current share price in Western Digital. Call volume is about double normal daily average volume. So $10 wide bullish call vertical. They only paid 60 cents, have a chance for that to expand to $10. So the risk reward's good, but you need a big, significant move in there. And something that might come out over the next month, because this is a 30-day trade, they still are working on that deal to buy Kioxia out of Japan also, which might provide maybe a catalyst to the upside for Western Digital.